Welcome, Anton Höpfel for Manapa Trading. This is the recap of today's Bund session. It's Friday, last day of the week, the 25th of October. First a look onto my hypos. What we can see here is that today we are having a situation that the market fell from the higher distribution from yesterday in the overnight session a little bit and filling out this LVN area. So almost testing this area here of yesterday main VPOC, which is also lying here together with from the bigger profile, from the monthly profile, volume VPOC. You see this here. We have one also here at this level around the 70, and we have one here at the 27 as well. You can see this here on the monthly profile here. The 170.40, the 53, and also the 70 level. All right, and as I see here, those are wrong. This must be at 40, 54 is right, and 70 is right. So this here is wrong. Sorry for that. Anyway, my preparation was this. If the pre-market holds this area, this will be a good range long level. Even better after a failed breakout. That means failed breakout to the downside here, testing the VPOC small or big. So that means bouncing back immediately from the 58 or 54, getting into this pre-market range would mean a good possibility here for the range long. You can also try it if there is no retest of this area and we holding and responsive buying here immediately. This will be a range long entry without the failed breakout. But if there is a failed breakout on the low, that means failed means breakout means they put some selling volume, pressure, but failing here at this area, right? Do you understand here? Don't accept this lower POC. Boom, going quick back in time and seeing that buy volume also as got after the rejection coming in again. This is then a good long from a hypo, but after the failed breakout, because no acceptance here at this area. Important is we have yesterday a day where we have a finished auction on the up and on the downside, right? So a little bit caught here in between those two areas. Anyway, the next hypo would be the long. If we see strong buying initiative into the 76 area, that means the higher pre-market edge, strong, the hypo 3, targets will be around 85. And if even power continues, 96 at the 96, hold on. Why have I only then one target here, the 85? Yeah, because we have a finished auction. So it is not very likely that they keep up and get above this area. That means we have a better opportunity looking for rejection already here at the volume edge, 80-85 area here, right? And bouncing back. So that means it would be over enthusiastic to set the goal for the target here to the 96, all right, to the high, because this is a strong high. But if, only for the case, that big money is coming in here, defending, absorbing, woo, we have a chance that this is going into the next upper distribution. Okay, and more important then, of course, as we were talking finished auction process, but not bouncing back so far, the play short, of course. That means strong selling initiative towards the 61. And what is important then, if it was a failed breakout before, as I told you, and it's bouncing back already from the 54, of course, then this is no target anymore. But if we see they played a range, they failed, and we see then the POC is migrating lower and lower. I showed on the picture. POC of the day migrates lower, 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 and then the initiative again, woo, away from this level. Then we would go for the next trade. This would the short initiative towards this level again from the intraday POC, but then not towards the 61, but more towards the 54. Then we would have to target 49. See this here, the volume edge, 49, and even then the level here, the next smaller POC in in the daily distribution a little bit. It's a minor POC, but important. When you look here, you see this 40 is a big VPOC in the composite profile from the whole month. So this is important. So this would be then the next target. And we wait here if they reject this area or if they accept this area to decide whether to stay within a home run position or not. What happens? Very interesting. Look at this here, pre-market. Short before the cash open, what could one observe? At this moment you would think, all right, maybe we get the short breakout, and let's wait then if we reject 58 respective to 53 area, which is our bigger PRC from the composite profile. Look what happens. At the moment you don't know. You only see they putting pressure into this level away from the PSC at the moment, pre-market PSC, right? They tried this the first time here, but failed. You see immediately rejection, and then now the same thing. This time we don't see this big rejection. That means more money in it. It's before the cash open. We want to see, wow. And now they're hitting getting through the 58 and getting towards, wow, the 53. And now remember, hypo 1 would be 61 range long from here up to here. And there's two ways to get it. If this would have not happened without this strong initiative, but here you see buying, rejection, testing again, boom, buying, rejection. This will be the normal range long entry. You can also watch it in footprint, normal interested in the low as more buy market orders coming in. But this doesn't happen. And think of it, there's also a second opportunity. The second opportunity would be rejection of a important mark, which is 58 here, and 53, 54 from the composite profile. That means if they reject this area, boom, which they did. Look at this. Big money rejection. 500, 200, 33. About 600 contracts got traded here back to this area immediately as we hit this area. You may wait now what is happening. All right, a little bit pulling back, seeing no confidence. But now, we're getting above this area again, 60, 61 area. We're getting above this volume edge, and money now is coming in again. You could have entered at this area already seeing there is no more sell interest, or you could be conservative and say, all right, I want to see them go and be above this POC from the morning, this volume edge, boom, which happens here, entering here, and now have to know your targets. Target area will be now the opposite side of the distribution. We're talking here of the range trade from a hypo 1. So that means other side, all right, here, volume edge, 73 from the pre-market, all right. See how this trade develops, the possible trade. You were never more in minus open than more than one tick. If you have opened here around this area here, see this here? You was never more than one tick open P&L minus. So this was a smart, intelligent level, worked as a failed breakout, meaning no acceptance at the moment of this lower and bigger POC. So market, short-term traders at least, seeing the rejection, and you see they tried to at least play and getting back to the range. So they played it, traded the range through a one risk-reward trade, not super, but look now what is happening. I told you, my next hypo will be, look at this. We want to see strong selling initiative towards the 61. This is taken out already. So next level, our low of the day and the volume edge to get to the 49 or even lower. Look what is happening. What do we always know? We want to see that the at the moment developing POC is migrating to the low. That they use this as a bounce. We want to see that it's a bounce absorption or bounce pullback level, and then boom, initiative away into this area where we had our strong selling, which got rejected by the buy side the first time. So this is the at the moment volume edge here. We want to see getting into this level towards with pressure. And what you got to see, what you need to see is that, and I draw now the volume profile of the very moment. See where is at the moment we have the POC right now here at the top. That means they tried here, they get some volume into it, but no more interest. And overall, I just draw. You don't see the chart, the price, but just look at the developing POC of the day. Look where the POC is migrating. All right. Still, price supposed to be at the top level as you see that there's volume build. volume build, volume build, volume build, but price is not getting above. Now seeing price obviously still building. Oh, now it's leaving the upper distribution. Now look at the price. Look at the price, what has happened. So we stayed here, POC stayed here. There were no aggressive tries at the top area getting to the upside. See this here? One candle trying to leave this POC at the moment, but immediately rejection. Another candle, but look, we are already below the at the moment POC. And now boom, leaving this distribution. And what you see is price ranging in this area. All right? But no aggressiveness. You see this? No aggressiveness at the above the at the moment POC. This is the at the moment POC. Only this candle here was one try to get above, but immediately rejected. And overall, this is just a range, a balanced area. A commitment between buyer and seller. This is the fair price. Okay, what you now understand is for our hypo that we want to trade the short and still have opportunity. Think of it. We want to see POC migrates lower and prices trading like here around the POC, and then boom, initiative coming in like here. If this would have happened, not here, but here with more like a B or a normal distribution POC, that means closer or with a B shape, very close to the low of the day and initiative away from it, then this will be in context to our big picture, the opportunity we will wait for. Look what is happening. All right, price getting lower, price getting lower. Price is at the moment at least not getting above this old rotational level where we were. This was the rotational level. Price at the moment is below the rotation. Look now at volume profile if the POC is migrating to the low. Woo. Wow. Okay. Woo. Very interested. Very interesting. Look at this. At this very moment, POC is now migrated from here to here. Wow. Now you gotta be careful. Now you gotta be in your starting position to start the race. This is just patient waiting for the trade till it appears. What is happening? Migrated POC to the middle here. Normal distribution, but very good. It is closer and it's in the middle. It's not a B shape, but at least a normal distribution, which also breakouts can appear. Interesting is migrating already to the low. And now see what is happening. This is the POC. This is our volume edge. This is what we want. POC migrating lower, an initiative coming, boom, pressure onto towards this area. To get our target number one, the 49 now. And if it holds on, even to see what the major big level mark, this is at the 40 here, see this mark, what is happening here. To at least get position 1 here, your position number 2 here, and only close your position if you see immediately rejection around this area. Then you can close it. But if you see that they bounce, refill, boom, selling, this will be even a possibility to get into home run lower. We don't know yet, but I want to see now how to handle the entry. All right, what you can see is POC is now here. All right, we're shifting back, pulling back to the developing POC that started already here at this moment at 9:44. You see, no big trading to the buy side, so we get no absorption sign, which would be nice. But if we see initiative also selling now crazy above from this level away, this will be a good entry signal. And look what's happening. Boom and boom. I always wait for 2 candles, 30 seconds. This is just my entry signal. I want to see that this is just not a failed try of initiative away from my POC in the direction I want, but I also want to see the next candle is not a rejection immediately. This isn't, right? It isn't. It even could be a green candle like getting at least 20-30%. I would not rate it as a failed, so I would give it a chance. As there was no chance because pressure was even holding on, you could have entered here with my stop above the initiative from the bear controlling this level. The bears control it obviously at the 63 level. I can show you in the footprint. Footprint 63. You see this here? This is where the bear started. This is even the follow-up. So stop should be above this candle 2 ticks. So that means we have our candle here at the level 64, 65, 6. This was my initial stop. 7 ticks, okay. Only 1.4 risk reward, but hey, better than 1 to 1. And it is in context to the big picture. And you know, this is not the till the end stop. I'm allowed to move the stop when I see new impulse phases coming in, as I showed you so many times. So what would you do now? What to handle? We're in this trade. Of course, I'm now expecting some reaction, pulling a little bit back maybe. That's allowed. What is happening? All right, they're even holding on. I'm allowed to say, if they are now, new money is coming in, oh, what is happening? When it is happening, boom. Not yet. Absorption now. See this? Bear absorbing this longs. Price not going higher. My stop will be still here. No new impulse phase. Absorption. Even price getting from this little selling lower. Absorption, a little bit buying. Now, impulse phase. This would be the moment to say now my stop is getting above this area from this wedge consolidation. This would mean my stop would be now here. Do you remember when I always tell you at the end, when I look at my lucrative trades that got stopped out, in the middle, I was able to handle it with a -3 tick stop. That you get immediately stopped out with the worst case of 7 ticks here means that this was no in the context play trade. A high probability that this was your mistake. Because if you get immediately stopped out trades, let's say 6 out of 10, is a sign, this was in my past, my experience is a sign for that this was not a good trade, that means not good in context of big picture. Okay, let's say what happened. Impulse phase. Your stop is now here. They still trying, they still getting here to this level, they still playing the side again to the upside. What happened now? You got stopped out. So this didn't work. This didn't work out here because we got stopped out here at the 62 level. That means you have a 3 tick stop, and this was not enough this time. At the end, this trade worked pretty good, but unfortunately you got stopped out. So with my stop rule here, 1 tick above the microstructure, some unusual thing was happen. That means Bund wasn't able to get it below the area where we wanted to see it. And you know what? Maybe the problem was the 53 level, the 53, 54 level here, the bigger PLC. You see, there was no coming through so far. And this was the problem for me. There was no coming through. You see, they sold. They also got absorbed. It's right. The buy pieces got absorbed by the seller, passive, but the initiative of selling that comes in again was not able to get the price significant lower. Only 1 tick more than in this structure. Rotation. Again, and a little bit buying. Yeah, compared from the streak here. It's not super bullish, but it was enough to get the price from 56 up to the 62. 6 ticks. That means we had some kind of vacuum in the ask volume. Maybe I would not get stopped out here because the contracts that were handled here at the top area, that means here at the top at 62, when you look at footprint, we can see it closer. This were only 37 contracts bought and 26 also sold here. So maybe, yeah, I was one of them, possible that I got stopped out. So what can I learn from this? I have to learn following. If I observe that this is happening often, more often, that means more than 2 or 3 times from my trades, I have to think of that this is, in this case, the stop rule to getting only 1 tick above the microstructure is not good. Then let's try it with 2 ticks above. If this is just something that happened maybe only 1 out of 10 times and I didn't get now this trade that was good planned and played so far and didn't get that finally, as you can see, then gave me the chance to get my target 1 and then even to my target 2, then that's okay. Because this was then a usual experience here that Bund was a little bit illiquid here in the upside and it stopped me out because normally it's not doing that. And this is what you need to find out then. For me, in the last 2 months, I cannot remember that I had some experience with the trade that they taken out the wedge consolidation without this was not a clear sign that the scenario was over. So that's the reason why I put it here. Normally the wedge consolidation structure should hold, because when they really are getting with volume above and stopped me out, this was even a high probability that the whole scenario failed. That means, again, rejection of the yesterday POC at the 58 level here, right? And getting back into the value. So this is why I'm doing it. I'm doing it because I'm often, this is the sign that the scenario then is over, just by a price stop. Anyway, didn't work with my stop move, but you see overall the scenario worked. The thing is, you can see here, you're not able with your system maybe to get every trade. Can be a little bit frustrating then, but you have to handle this and handle your emotion and just look at your statistics and say, okay, calm down. As long as I see I get 9 out of 10 trades that are like this lucrative, and let's say 6 out of them is getting a winner. If you then sometimes 1 out of 10 don't get the trade, even your stop handling in the other 9 cases was good and showed you that it's over, or give you the space, the room, the air that needs for the trade to unfold, then that's the thing it is. So what? Didn't work out, stopped out, scenario worked at least. So 2 hypos played. Remember, this was our range long level after the failed breakout, worked good. And the play short and play long, price didn't even get to this area. No 76 appearance of pressure at the migrated POC at the top. You see there was no time, only one time a try to get into the 76 level here. This was here, but you see immediately rejection of a candle that was more than almost 50% of the first candle. This would be a first rejection, no entry signal then for me. Like, remember, in this case it wasn't. We had a straight candle away from the migrating to the lower POC into this level, to this area, boom, and you see the next level was even not greenish. So that means here we have a good entry signal from my understanding. Here we did not have for our hypo to the long side. All right. That's it. Thanks for watching. And this is Anton Oeffel for Manapa. Bye bye.